Hello traders, and welcome to another video review. Today is Friday, October 27, 2023. Let's find out what is going on the Forex economic calendar today. As you can see, some data had been published overnight in form of the Tokyo Core CPI and CPI without food and energy. Both of them were better than expected. 2.7 was the Tokyo Core CPI. Forecast was 2.5%, and the actual reading of CPI excluding food and energy was 0.4%. The producer price index from Australia had been published as well. These data are for the third quarter. As you can see, they beat the expectations, so the producer price index is gaining towards the level of 1.8%. Forecast was 0.7%, and generally the PPI for the third quarter is 3.8%. Today is the Friday, so it's the Eurozone Leaders Summit, and the key event of today is the called PCE Price Index data, and this data are scheduled for release at 2:30. Those data are of course from the EU, as all of the sub indices are mentioned here. Together with the PCE Price Index, personal spending data will be published from the US, and from the Canada. Wholesale sales will be published as well. The last reading of this data was 2.3%. Michigan inflation expectation, consumer expectations, and consumer sentiment data from the US, all of them are scheduled for release at 4 o'clock, and then at 7 o'clock we got the US Barker Hughes Oil Rig Count and Total Rig Count. Both of this data are very important for the crude oil traders particular. So only one very important event for today. Nevertheless, we are going to start with the US dollar to the Japanese yen, which is of course related to the data that are scheduled to and be released from the US later on. So let's just start with the US dollar to the Japanese yen technical chart, 4-hour technical chart. So as you can see, this is the 4-hour chart. We broke above the level of 150.17. Now this level will act as the local support. Okay, so let me just make it green, and of course we made a new swing high and local high. 150.75 is this new swing high. This high was made during the extremely overbought market conditions on the 4-hour chart, which is why we are now moving lower. The market has been seen testing the local technical support, right, and the previous swing high. The local lows are 150.10, which means this is the intraday technical support, and as you can see, it's very close to the 50 periods moving average. So in case of a further extension to the downside, there is one more level which is worth to mention. It's the level of 150 basically, so it's a psychological level still, but in a case of a breakout below 150, then the next target is the 200 periods moving average located at 149.58. So the outlook for the US dollar versus the Japanese yen remains bullish. However, temporary pullback from the extremely overbought market conditions is right now on the table, and we might see some drop on this market. US dollar versus euro versus the US dollar, so another very important market. The key market, the most popular trading pair, has been seen bouncing a little bit higher towards the moving averages, right? So we got this local technical resistance 1.0587, which is just above the merge of the two moving averages. 1.0580, 1.0579 are the levels for the 50 and 100 periods moving average. So if we will test this levels and be rejected, then intraday technical support is 1.0523, And then of course there's one more level located at 1.0496. The key technical support remains at 1.0449, so there is still some room to the downside. As you can see, momentum is weak, momentum is negative, 47 points. Bulls are trying to bounce here, they are trying to regain the momentum, but after the A, B and C swing to the downside, there is rather bigger probability that the market will resume the down move, and sooner or later we will hit the extremely oversold levels, and of course we will hit one of these technical support levels as well. One more market for analysis. I will go with the gold market. Why? Because it looks like the gold is rallying very nicely. Now let's switch to the daily time frame chart to gain the perspective of the last, there you go, of the last technical resistance. So that technical resistance was located at the level of 1986. It was violated because there is a new high, 1996, and this is 1986, so that's $10 higher. Let me just mark it for you. So we got the new local high. Okay, and as you can see, we went straight up from the extremely oversold conditions to the extremely overbought. So some sort of the pullback is welcome. Nevertheless, still the target for the bulls is located at 2080. This is the target. This is the this year high, and the next target for the bulls for now. However, some sort of the pullback is welcome. We got the technical support located at 1952, so we should bounce from this level and move higher in order to continue this this up move. It looks pretty impulsive. Moreover, it looks like the V-shape reversal. We've made a new local swing high. Okay, so that so now the most important level is still 2080, but remember that would be the level which is key level for the swing traders and even long-term traders, because it's a yearly high. All right, so any violation of this level is big. Okay, it's a big issue for, especially I guess for the bears. All right, so please keep an eye on the gold, how it behaves inside of this consolidation here between the technical support 1952 and the technical resistance 1986, 1996. Okay, so we are close to the level of 2000. Again, 2000 is a round level, psychological level. It's going to drag the price towards it because it works as a magnet for the price. Any violation of the technical support might pause the rally for quite some time, and we can see another extension to the downside towards the technical support level made of the moving average. Okay, so 1922, 1921 is the level, but then of course it's barely any technical support unless this gap 1834, 1843, so barely $10 a gap, which is way lower on the gold. So if the bulls want to preserve the momentum, they have to bounce and extend the up move towards the yearly high, because this is the key lever for all of the gold bucks out there, and everyone is looking at the current situation on the gold, most likely because there is a gap up on the spot gold market, and there is a very impulsive looking development to the upside on gold. So please stay focused, keep an eye on the levels, because it looks like the bulls might be ready to pull back and then resume the uptrend very soon. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next week. So take care and bye bye.